So, good evening, everybody. I would like to welcome you to the Andrion Academy, Redefining Client Experience with Fintech. I'm particularly pleased that we are able to hold this academy with our Fintech partner, Crealogics, and also Third Eyes Analytics. We strongly believe that cooperation among Fintechs will become even more important to create an improved client experience. My name is Roberto Zimmermann. I'm a member of the executive team of Andrion Capco Switzerland. I will be your host this evening and guide you through this webinar with our fintech partners. Let me first introduce you our panelists. Agnello Bove is a partner at Capco, a global management and technology consulting firm with a special focus in financial services. Agnello has several years of experience in IT and has been involved in many strategic projects nationally, but also internationally. He knows the fintech scene very well, and he's an expert when it comes to latest technologies. The second speaker is Mark Mettler. Mark is the head of business development at Third Eyes Analytics. He has more than 20 years of transformation experience in the wealth management industry. Third Eyes Analytics, they enable interactive scenario and goal-based investing in an open banking context. The last speaker is René Rabe. René is Global Segment Sales Lead Wealth at Crealogics. He also has more than 20 years of experience internationally, nationally, in wealth management, but also in the software industry. Crealogics is a front-end provider whose innovative technology enables financial institutions to track or to fast-track digital transformation. So what's the agenda of this academy? First, Agnello will start with the fintech ecosystem and how really fintech can combine their offering and generate more value. Mark Mettler from Third Eyes Analytics, he will talk about hyper-personalization of wealth planning in a context of fintech, open banking, and also ecosystems, and he will have a demo showcase. The last presentation, where all the dots are coming together, is René Rabe from Crealogics. He will talk about the Digital Hub, he will present the Digital Hub, and he will show how Third Eyes as a module is integrated into the Digital Hub of Crealogics. Lastly, we will have a wrap-up, a summary, and a Q&A session. Just two remarks before we start with the session. This webinar will be recorded, and it will be possible to watch this on YouTube afterwards. The link will be sent out after this event. Secondly, there will also be the opportunity to ask questions about the presentation. So feel free and be active as well in asking questions to the panelists. So then, let's start the show. Agnello, the floor is yours.
Thank you, Roberto, for this warm welcome. Thanks everybody for joining today as well from my side. It's an honor to explain you to where we are with our fintechable or fintech offering at Andrion Capco. Let me explain a little bit what we did in the last couple of years. Since 2017, we are in touch with many fintech companies in Switzerland and even outside of Switzerland. Why are we that? Of course, we are always interested to provide additional value to our customers, but also to learn from the fintech, their thinking, their features, their platform. And we are also part of the F10 community. We are mentoring and supporting also some startups, not only settled companies like an example, Crealogics and Third Eyes are, but also for some more startup companies. So that's something we started in 2017, and in the meantime, we have a nice, let's say, landscape created of fintech companies. These logos are just a few of them to represent. It's fantastic to have Crealogics, René, and also Mark from Third Eyes today showing their capabilities and the reason why we are collaborating with companies like Crealogics and Third Eyes is to actually, as I said, offer the customer new additional values together. Together means that often we are approached from companies like Creologics and Third Eyes that they can focus on the real research and development of their platform, of their product, and are maybe sometimes struggling with the capacity when it comes to implement their solution at the customer side. Sometimes they can do it on their own, sometimes they need some help, and that's where we are. We are always happy to support our friends when it comes to implement such a solution along the business requirements of the customer. And that's how we created and built up the relationship with our fintech landscape companies, and especially you will see also what is the capability of Creologic and Third Eyes. This is a little bit where we were and are today. Then let me explain now where we want to go with this foundation we built in the last couple of years. Roberto, we go to the next slide, please. So additionally, as you know, we have Roberto on board since now almost 1 year. He is very well settled in the Kantonalbank domain in Switzerland, not only, but as well he himself was also leading some digitalization and technology topics, but also front office topics in one of the Kantonalbank. And he created within our domain a roundtable with Kantonalbanks. Very successfully, he launched this in this year, and now the next round is going to happen in November. We are really looking forward. This is something which we also built on top. Now what we are going to do is actually bringing the Kantonalbanks and the fintech together. On our fintech ecosystem, we did apply a governance on top of it. We have an inventory where we really take care about relationship with our fintechs. We do some product education training, but we also are evaluating our relationship from time to time. So we really focus on the fintech where we can do some business and where we can help them and they can help us. So it's a real relationship on the same eye level. So now what we're going to do is actually bringing them together. How do we do that? At the next roundtable with the Kantonalbanks, also leading by Roberto, we will have a call out and asking the banks what is a possible project or where is a pain point they have. So that could be a data issue or challenge. It can be a CRM or a digital conversational application challenge, whatever that is. That call will be communicated, and the Kantonalbank can select or create their own project request. This project request we will share with our fintech ecosystem, and the idea is then that some fintech will be selected, and then in January next year we will have here in Oerlikon, in our wonderful office building, we will create a kind of prototype, proof of concept or education workshop, depending on the project and on the selected fintech. Here we will moderate this day. We will create, first inspire, then create, and then implement wherever possible such a prototype. Together with the Kantonalbanks or Kantonalbank and the fintech or the fintechs together. That's something where we want to demonstrate that with our approach and with the right request and the right fintech, we can create in a day something valuable, which can be used from the customer, but also it gives the fintech some feedback. What is the real pain point of the customer? This result then we will share in the future, maybe in one of these nice academies, but also maybe in other meetings. And that cycle, which I just explained, we will do twice a year. This is the next level of fintechable, as we call it here in Capco Andrion. That's the next level of fintech we are looking for and we are launching this year. So I'm really looking forward and very happy to be able to explain this. And now I want to give enough time our friends and colleagues to demonstrate and explain more about their fintech solution. So thanks a lot for listening, and I'm looking really forward to meet some of you guys in one of the next roundtable or fintech workshop.
Thanks a lot. I hope that you see my screen. So very warm welcome from my side. My name is Mark, as you have heard, and I'm leading business development at Third Eyes Analytics. We're going to talk a little bit about the hyper-personalization of wealth planning. This is the core of our offering, and it's all about dreams. I mean, many of the banks are currently discussing how to implement what others call goal-based advice, but in the end, it's all about how can they identify the full wealth of a client, motivate the client to disclose that wealth. And this is almost only possible through financial goals and dreams, which is probably the better term. And this is what we are supporting financial institutions with. So the technology behind that. I would like to start with a couple of interesting findings from a recently published study. What you see here on that slide, I'm not going to go into any detail, but it seems that clients are effectively willing to share information with their primary wealth manager before a doctor or a healthcare provider, an insurance company or whomever, but with their primary wealth manager, if they receive more relevant and personalized services and experiences in return. So I really urge you to have a look at that study, which has really a couple of interesting findings. Another one is about what are those clients willing to share with regard to information. And surprisingly, and I hear that very often, that people are reluctant to share, but surprisingly, if you address those clients in the right manner, it seems that out of, I think, roughly, I don't remember how many, but I think it was a very high number of clients which were surveyed. In 2019, were close to 3,000. I'm not sure how many there were in 2021. But overall, 72% are willing to share financial goals and ambitions with their primary wealth manager. And I think this is a really interesting finding and needs to be taken into consideration for the design of future offerings. As it has been mentioned, fintech, open banking, and ecosystems. I mean, fintech, as we do, they tend to focus on core competencies, so very limited, normally very limited set of the value chain which they cover. So it's super important for us, and probably many others out there, that we have a working ecosystem which allows to thrive and generate significant benefits. What we have here on the screenshot is just an example on how our solution could be embedded in an e-banking solution, and I'm happy to hand over to René for that afterwards. But what you can see here is based on assets which have been booked at the bank, based on the Pillar 3A and obviously also the personal wealth, our solution allows to easily calculate, for example, what kind of payout during retirement on a monthly basis is possible to afford until expected life end. What you see here on that screen on the lower left-hand side is that this specific end client could pay out 8,469 Swiss francs on a monthly basis during retirement, but based on a requirement of 13,867. So this is the adherence to the living standard, which can be derived from the gross income as an approximation. You see that this just does not suffice. And another thing which you see here is you can put the very provocative statement saying, if you pay out the 13,000 on a monthly basis, you will run out of money when you turn 74. So this is something where an embedded solution is obviously super helpful if you source existing data, interpret that data to a certain extent, and have the client start thinking about his or her personal situation. So that as an example. But what I would like to show you is effectively now how such a thing can be translated into proper investment advice. Because you see now that client sees there's a monthly pension gap of roughly 5,000. So how can we deal with that? And for that, obviously, these things tend to become rather complicated, not so easy to understand for end clients, like probably this one. So our hypothesis is, although we offer self-directed solutions as well and very simplified solutions, but that an advisor is needed for such a discussion. And what I would like to show you now is how such an advisory solution can look like in order to identify dreams of clients, translate those into financial goals, and then derive a proper strategic asset allocation out of that and an investment proposal, which can then be distributed through, for example, our partner here, Crealogics, and also be monitored accordingly. So what you see on this screen, and I hope you see it, is the various modules which we offer in our advisory solution. I will not bore you with risk profiling things. Just be advised that what I show you is fully MiFID II compliant. To that extent, as a product provider, can endure it. So risk profiling is fully integrated into everything I show you here. Let's assume we have a client with assets booked at the bank of 800,000 euros, consisting of cash 400,000 euros and equity is another 400,000 euros. What you see on the right-hand side is the forecast of the client's net wealth. So I forgot to mention effectively that there's a credit, a loan as well, of 200,000, which you see at the lower part of the screen at this point in time. So you have a net wealth of a client starting at 600K with a forecast in 1,000 capital market scenarios, which we simulate in a very, very realistic manner. And what you see as a funnel is the median scenario in the middle, the expected case, a very good capital market development, and a very adverse capital market development. I'm happy to deep dive if there are any questions into more details, but I think let's just say that we have won a lot of awards because we do a realistic modeling. So I don't jump into any further details. Let's assume that this specific client has various financial goals. So let's just say instead of the 13,000, client says, okay, I want to have a monthly payout during my retirement in order to keep my living standard of 8,000 euros in an inflation-adjusted manner. So we save that and we activate that goal. And I know we have a little bit of delay in that webcast, but overall, you'll see how the solution directly reacts. And you see that in the median scenario, that's the green bar, the client can almost completely achieve that financial goal. While in the very adverse financial scenario, this is what you see back here, 332,000 euros are missing in order to achieve the goal in the very adverse capital market scenario. You also see in the graph, the dark blue line, that the client runs out of money shortly after expected life end, which is determined or which determines the planning horizon. Let's assume the client has a couple of more goals. For example, the client wants to have a renovation of the house in 2024, expects a significant amount, 350,000 euro. So let's just activate that specific thing and see how that affects all the other goals. Then there's the third goal. The client wants to achieve an investment return of 2.5% overall. And what you see now here effectively is that the payout, which is the 350,000, that can be achieved. That's not the problem in the good scenario, the expected scenario, and in the adverse scenario. Then there's again the wealth development, and when retirement starts, the client is paying out those 8,000 euros and obviously has a financing gap now which is bigger because of the situation of paying for the renovation. What you see is that in the median scenario, the keep living standard goal, financial goal, cannot be achieved. Only about half of it can be paid out. Renovation is fine, is green, and the 2.5% investment return cannot be achieved as well. What we have recently developed, also based on a verified academic study which has won the Nobel Prize in 2018, is a so-called climate change analyzer. So we allow clients to identify the impact of rising temperatures on their wealth development. So if we just say 4 degrees of rising temperatures, you see that the liquidity issue is at an earlier point in time, the financing gap increases, and the situation looks even worse than before. So that we have recently developed, and the idea behind that, for which William Nordhaus has won the Nobel Prize, is he outlined that rising temperatures will affect GDP growth, will reduce GDP growth, and this again is the primary determinant of long-term investment returns. Hence, long-term investment returns will come down as well, and as a consequence, obviously, the achievement of financial goals will come down, and we cannot count on having the same investment returns in the past if temperature rises beyond 2 degrees, because after that we have a significant impact in the high sensitivity. So this as a starting point, let's just assume a 3-degree temperature increase and see how we can optimize that situation. So here we are again, just in the as-is situation. What I forgot to mention, obviously, also have inflows like a government pension for that German client, which we simulate here, which is 1,000 euros increasing, and 1,200 from occupational pension. So here, obviously, these are inflows into wealth, which then obviously increase the goal achievement again. And this is also that interaction also is very interesting from that point of view, that you can, as an advisor, in a very simple manner, pitch for additional assets. Let's just assume you want to show the client how assets held at third parties would improve their personal situation. So if you'd enter, let's say, let's take a big amount, 500,000 euros, additional equities held at the third party, you see that there's a direct reaction with regard to yes, goal achievement increases, the financial gap is reduced. So this allows to effectively and in a very simple manner pitch for additional assets held at third parties. So I remove that again, save that, and let's take that as a starting point and move into the optimization. What we're doing as part of the next step is we improve the strategic asset allocation, and we stochastically search for the best strategic asset allocation that maximizes the client's goals. How do we do that? We can either optimize against a subset of strategic asset allocations, for example, fixed income, balanced, capital gain and growth, like many companies or banks, wealth managers do have it, or we can do it in a very individual manner, taking all possible combinations in 1% steps, which result out of the different asset classes. So for example, if you have just 2 asset classes, equities and bonds, you would have 100 combinations. So 1% equity, 99% bonds, 2%, 98, etc., etc. But we have normally, for our clients, so B2B, we have normally like 24 asset classes. So these are trillions of different combinations in 1% steps. And we combine each of that combination again with 1,000 capital market scenarios. We do that in the cloud with load balancing mechanisms. And this ensures that we just find the best asset allocation which maximizes goals in all capital market scenarios. And this is what you see on that side, on that page. So you have the actual situation on the left-hand side with a mediocre goal achievement in the median scenario. The return goal cannot be achieved at all. And with the new asset allocation, which I'm going to outline shortly, you see that the goal achievement significantly increases, and that the living standards, so the payouts during retirement, can be ensured that just only really at the very end of the expected life end, the client runs out of money in the median scenario. What's also important to say is that in the very adverse capital market scenario, so if markets are really, really bad, and that includes non-normal distribution, so extreme events, the client is still better off when he or she invests. How do I see that? On the left-hand side, we have a financing gap of 470,000 euros, 77,000 euros. And on the right-hand side, we only have a financing gap of 223,000 euros. So I miss less in order to achieve my financial goal, keep the living standard in a very adverse capital market environment. So how does the optimized asset allocation look like? Let's compare it before and after. Before on the left side, after on the right side. So we have 50% cash and 50% in equity as a starting point on the left-hand side. On the right-hand side, the optimizer reduces the cash down to 20%. Astonishingly reduces the equity quota, and I'll come to that, and increases alternative investments. And how does the equity quota look like? So we see that there is a distribution amongst equities in Eurozone, USA, and world, and alternative investments. We have gold included, and we have infrastructure and renewable energy included. Why is that? Because we have simulated a temperature increase of 3 degrees. Now, infrastructure and renewable energy is less affected by temperature increase as an asset class compared to equities world, for example. Hence, the equity quota is slightly reduced, while the alternative investment quota, which obviously is not as much affected by rising temperatures, is accordingly increased. So again, just as a quick recap, we see that goal achievement is granted in the median scenario and looks much better in the adverse capital market scenario. Next step is now interesting, and I move quickly into another configuration of our solution. The key question is now we have an asset allocation, and how do we fill that asset allocation with products? And for that, we have various logics. An interesting one, which is probably the most innovative one, is the one which we've developed, where we have a bank-specific, wealth manager-specific investment universe behind, which is screened against various criteria. So let's just assume that the client, so the end client, the private client, has some investment ideas and says, for example, I want to have a value focus in my portfolio. I want to have an SME focus, whatever kind of focus I want to have incorporated in my portfolio. I think I can generate higher returns out of a value focus. Let's save that, and then let's ensure that we have either incorporated all ESG criteria, as you can see here, or alternatively, that we just incorporate the environmental aspects, so only the E of ESG in the portfolio. We save that as the requirements of the clients, and we do a quick product search, which scans the whole products against that criteria set. And if we look, for example, at equities, emerging markets, that example, let me look at equities Germany. We see that the products with the highest best fit score are selected. Now, we have the best fit score is determined by the matching and the quality score. The quality score again, is determined by the Morningstar rating and the Morningstar sustainability rating, because we had that selected as a requirement. While the matching scores, the quality scores, says how good is the quality of the product, while the matching score says how well does the product match my requirements. And we have a full E-focus, environmental focus of that specific products. But unfortunately, the requirement of having a value focus cannot be covered because the product universe is just limited. Product governance, for example, as a reason for that within MiFID II. Let's just say we, for whatever reason, want to take this fund and not this fund, save it. And what happens then? We calculate the carbon footprint of the portfolio, which you see here. The carbon footprint on the upper right-hand side, you see 3.3 out of 5. And there are various products in it with various ratings. So you see that here again, we trigger the various interfaces of data providers, be it Morningstar, be it other partners. We can trigger more or less everybody who has an API. And these are almost all we know. And there are some products which are mediocrely rated. So there are various elements there. So carbon footprint is here. ESG risk is here as well. So an ESG score of 3.1 out of 5. And you see the products which have a good ESG rating overall with a social score, environmental score, and governance score as a detail. So this is how we create an investment proposal. Let's assume the client agrees to all the products you see. We then just implement the portfolio, and then, and this brings me again back to the ecosystem, we send then the new investment proposal to the core banking system or to the PMS. Many PMS can today create a model portfolio on a per client basis to rebalance against. So we know a couple which with whom we or with which we can collaborate. So we would then send that portfolio with the composition on ISIN level to that portfolio management system, and the rebalancing again then occurs on a per client level with a completely individual model portfolio in the background. So individual in the sense of not only asset allocation, where we normally have 5 categories in the wealth managers and in the banks, but really individual asset allocation and also very individual portfolio construction. So we implement that portfolio, and then obviously as time is passing, that portfolio at some point in time does have some fluctuations. And let's just assume normally if we are integrated, this is now a standalone solution. I got to go to the other one again. Now, if we have that portfolio integrated, and this is, let me just do that quickly. So we have the portfolio integrated. There's some fluctuations on the timeline, and obviously some alerts can be triggered. Let's just assume we go, there's a significant development, and we go beyond that, beyond the equity quota, which is allowed. You then see a warning which says your current asset allocation is riskier than your risk profile, so there's a need for additional advice. And we obviously now need either an environment to push that notification to the advisor. So if the whole monitoring is there, but we need that notification to push that out to the advisor or to the end client directly if it's in an advisory mandate. And with that, I actually like to finish my presentation here and hand over to René, who can perfectly show you how such notifications can be pushed to various clients and in various channels.
Thank you, Mark. And good afternoon to everybody. Glad to be on the call as a panelist today. So my topic is connecting the dots with our digital hub, and this should quickly explain you how, for example, the third-eye application can be integrated into our digital engagement platform, which is then accessible also to the end clients. So before I start in detail, I want to give you a quick introduction about Crealogics. So also Crealogic started 25 years ago as a fintech with 4 founders who started their business out of Zurich and built the first e-banking back then for Credit Suisse. And over the last 25 years, the team grew from 4 founding members to over 600 people, which are now globally working in 4 main regions, which is still as the main region, the DACH region, so Switzerland and Germany, but also now with offices in UK, in Middle East, and in Asia Pacific. And the focus of the company is a pure play front-end provider. This means Crealogic evolved from an e-banking provider to now a so-called digital engagement platform provider, which goes beyond e-banking by using then third-party applications from fintechs to increase the user experience for the clients. Over the last 25 years, we helped over 500 institutions to digitize their processes, so meaning hundreds or thousands of projects which have been delivered in quality and on time. And now we see that there's a change in the market, that things are opening up, that there are companies who specialize, might it be in chat applications, might it be in advisory, might it be in electronic signature. And those companies need a platform where they can be integrated in to, on the one hand, increase the services a bank can give to their clients and also to fit their demanding needs. And on the other hand, to stick the clients better to a bank, so that they are then willing to share their data and make more business with the bank, so that the bank at the end can also monetize these new services. With our one product, which is called the Digital Hub, we provide a platform for fintechs and also for banks, where we can orchestrate and put all the things together and connect the dots. This means with this one product, a bank can have one single experience for their clients. And if we go here into the detail, we see on the left side, there are so-called basic modules. So this is what is kind of, let's say, a commodity. So nowadays, financial institutions, they have an onboarding, they can show portfolios, they can show accounts, they can store documents, and there's a communication channel, often a secure messaging, or at least some way to interact with the advisors. But then it comes to the light gray solutions, which can be added on to extend the services. So this could be, for example, a real-time trading platform, an advisory tool, a retirement planning tool, or even a mortgage application. And these things running on the Digital Hub allow then a financial institution to serve different segments without having lots of various tools or platforms. So based on the hub, they can say, we have a combination for the retail segment, which is mainly focused on payments and cards and financing mortgages, while in the affluent wealth space, there's now more a need on the investment side, trading account side. And in the high net worth area, it's more about wealth planning, heritage, inheriting money from one person to the other. And having said this, we picked now one example for the third eye solution you saw presented from Mark. And this is considered as a hybrid advisory in our world. So beside the single enhancements of the platform, we have also this so-called ready-made solution packages, where I can either say, okay, what do I need to combine to provide a discretionary service, or what do I need to combine to have a mobile first solution, or in that case, what do I need to have a hybrid advisory? And this normally means there's an advisory tool, for example, the one from Third Eyes, and there's the end client who ideally has also access to this information, and it can be seamlessly exchanged between the parties. So this means on our side, the communication part is used. And from the partner world, we have here the wealth advisory from Third Eyes. You see there are also other companies mentioned, which can be integrated on the hub to extend the whole ecosystem. And in that case, what Mark said, this notification that there's a violation in the portfolio combined with the communication module from Crealogics could then help the client to get an information and also assure this hyper personalization feeling for the client. If we look at this now a little bit from the technical side, so what's needed, the digital hub consists of various building blocks or bricks. So there's a foundation, and on this foundation there are several modules. So there are internal ones, which we saw from Crealogics, the portfolios, the payments, the documents, and also the communication module. And then we have an ecosystem of, at the moment, 50 fintechs, and they provide the so-called third-party modules. And here we see the third eye module, which is the advisory tool. On top of these modules, we have then APIs, and on top of these APIs are decoupled front end, which allows to have also a holistic user interface across multiple solutions, which makes it easier for the client because everything looks the same. And also from the maintenance part, it's a lot of flexibility for a financial institution to have this in place. As we see, then the whole thing is sitting or talking to a core banking system. And this is also important to say that our solution is agnostic from a back end. So nevertheless, if the bank uses a Finova, a Temenos, an Avalok, or whatever core banking system, the whole thing runs independently on top using APIs for the data exchange. And to make this a little bit more tangible, I would like to quickly show you an user journey, how the things Mark has explained from the Third Eye platform could look like integrated on the digital hub for an end client who has his mobile phone in place. And let me quickly load the screen here. So now you should see a mobile screen. And this is important to say, in the old world, there were the advisory tools, and then when there was a violation breach, the advisor was informed, and then normally he picked the phone and tried to contact the client, ask him on the phone to do things, or ask for a meeting that the client has to come into a branch or into an office. But as we are talking about wealth management, there are also clients who are served offshore, so in other countries, so they cannot just easily come into an office, or they have other things to do and are not so easily reachable via phone. So having such a push notification on the mobile phone of a client, this shows to the client, okay, my advisor, my bank cares for me. I have a personal feeling or hyper-personalized experience that someone is looking and monitoring my positions. And we see now here the restriction violation, which has been showed in the advisory tool from Third Eyes on the mobile phone of an end client. I see you now, hi Mr. Ben, you have a restriction violation in your portfolio. And as the client, I can click on this notification. I can log into my banking app, and then I'm in a kind of a chat, but in a secured environment. So it's similar, like people are now using WhatsApp or WeChat, but in a secure environment. And here I see now the note from my advisor saying there's a restriction violation in my portfolio. And I'm, as the end client, I have now several options. So I can say I ignore this, I can call my advisor, or I can start messaging him. So for me, it's quite convenient to say, okay, let's message my advisor. The system is connecting to him, and then I can start and write a message and ask him, my advisor is called Tony, could you please give me more details what happened? And then this whole thing pops up in the administration screen on the advisor side, and he sees then that I, as a client, has reacted when it was convenient for me. Then the advisor has the possibility to write back, and he can give me then the information that you say, hey Raymond, this is me, the client. Due to high market volatility, there was a breach in your in your agreed asset allocation profile. So for me as a client, I can then ask, how can we mitigate this? And my advisor can come back to me and say he will create and share an updated investment proposal, which we saw, which will then be generated in the Third Eyes tool, for example, to rebalance my portfolio to bring me back into the agreed ranges. What as a next step could be optionally integrated here is now then also to maybe look at the current risk profile and then ask, for example, if the risk profile should be increased to have broader ranges to maybe avoid these rebalancing topics, or to say what can we do to give more flexibility in the market. But here in this case, everything stays as it is. And I'm saying, okay, I wait now for my proposal from my advisor. And in the meantime, my advisor can now work on this. And I'm, as the client, I can enjoy my pension and can do my work, can do my vacation, whatever I want to do. Once my advisor is ready, he will then send me the investment proposal. I get the notice. And then as a client, I can click on it and see here what my advisor has prepared for me. So I see here my wealth overview, I see my portfolio, still my actual goals which are set. And then if I scroll down here to the recommendation, I see my actual asset allocation on the left side, and I see my recommended asset allocation, so the target allocation, on the right side. And for me as a client, I see that now, okay, they took care of it, they bring it back to the right asset ranges. I see then here also some detailed information. So as a next step, I can then maybe call my advisor and ask him, yeah, can you please explain me this and that if something is not clear. If everything is clear for me, then I can tell him thanks for the new investment proposal, and then according to the country where I am, I can then ideally digitally sign the whole thing. So also here we have integrated multiple electronic signature solutions according to the region financial institution is located. And as the end client, I can sign then the proposal, and once it is signed, the whole thing is then sent back. I'm saying, please rebalance my portfolio as proposed, and then it goes straight to the advisor, and he's then saying, thank you, we will update you. And then, like Mark said, the whole thing can be rebalanced and then handed over to a core banking system or portfolio management system. And I'm, as the client, I had a nice hybrid interaction. So I was not chatting to a machine, I was chatting to a real human being. We had a nice interaction. I didn't need to attend a branch or had a call and have to explain on the phone what would be in the proposal. So I directly saw the new solution, the new proposal. I saw the document. I saw what they're going to change. And this is a new way of engaging. And this is also an example how these things can be integrated in a platform. And then if we go to the last slide. So this was one journey, how these breach in a violation breach could be mitigated. But having such an channel in place with your end clients, there are much more possibilities. For example, I can also do campaign management and market new offers for a client. Or if there's a better fund, I can say switch from this fund into that fund. I can do notifications, which could be this violation breach, but could be also regulatory notifications like a loss threshold notification according to MiFID II. I can also use this for self-service administration. So when there's a document which needs to be updated, could be a formula, could be a passport. So there are many, many other user journeys we can exchange from the recent projects or discussions we had. And therefore we are asking you, let's get in touch with us and have a workshop to, on the one hand, identify how this third eye solution can work together with such a solution, and also to mention this would work with any other e-banking portal you have already in place, because it's modular and can sit aside whatever you have already in place. or to find out other user journeys. And with that, I hand over to Roberto for the Q&A session and summary. Many thanks.
Thanks a lot, René, Agnello, and as well Mark for the interesting presentation. So I'll leave now this academy open for questions. Are there any questions that you would like to ask as a participant? You can enter the questions in the window. Okay, there was one question I saw that goes to you, Mark. So that goes really together with the investment proposal. I mean, that shows it goes beyond the regulatory requirements. So why do you develop a climate change analyzer, and what's the underlying rationale out of that?
In short, if you do wealth modeling, and if you want to do it realistically, you need to take into account that long-term investment returns will be affected by climate change. And this is, I mean, we really have the ambition to have the most realistic wealth modeling out there. So we include fees, we include investment taxes, we include rebalancings with the respective fees deducted. So that's really our ambition, non-normality included. We really want to have the most realistic wealth modeling out there. The consequence is twofold. You need to include climate change if you want to model realistically. And the second thing is a little bit of a belief thing which we have. If we include climate change and if we manage to convince clients to have that included in the optimization, we will be indirectly reducing CO2 emissions as well. Everybody's currently talking about the portfolio module where the composition of the individual instruments optimize the CO2 footprint potentially, but nobody's really talking about how on asset allocation level a CO2 footprints can be reduced. Let me make one concrete example. For an MSCI World, for the index, this is data from the index providers. You have CO2 emissions of 130 million tons per million US dollar investment. If you just invest into the index, into the respective companies. If you do that into other asset classes, which are less carbon intensive, you have a significant reduction of CO2 emissions if you again invest in the index into respective companies. For example, whatever the index is on the alternative side. And like that, we really align investor interests because they invest into asset allocations which are less affected by rising temperatures, while at the same time reducing our carbon intensity. And that's a very, I would say, innovative thing to do. And this is why we're in regular interaction with the technology fund and other providers in that sense.
Okay, great. Thanks, Mark, for the answer. Next question goes to you, René. So, I mean, you are handling or seeing a lot of banks as well. So, I mean, how do you rate the user experience at the banks that you are dealing with?
Yeah, so especially in wealth management, we see due to the COVID thing that they have now speed up their digitization processes. When you look at retail banks, they are already quite digital. So I can prolong my mortgage digital. I can open a cash account or a savings account digital. I can even with an online broker open an account and then trade online. But when it comes to wealth management, we mainly see 2-3 challenges. So one is some clients, they are living in other countries, so they are retired, so they are sitting in Spain or in other countries. So they said, I can come to a branch each and every time I need to sign a form. Or if there is, for example, a change in the portfolio, I would like to be informed. It doesn't need to be necessarily in real time, but I want to have someone looking after my portfolio. If I'm paying private banking fees, I also want to have a private banking service. And I have worked 8 years in a private bank, and if you serve on average nowadays 100 clients, you make the majority with the top 10, top 20 clients, but the other 80 clients, they also want to have a personalized service, and technology can help to provide this. And having said this, the things we showed here, especially the interaction, clients are used now to use chats, messages. They want to have instant feedback. They don't want to see an email which has been sent 5 days ago and was in the spam folder or somewhere else, and they said, oh, now the opportunity is gone, or why haven't you informed me earlier, or why haven't you called me, or I get a call and it's the wrong timing. And the other thing is what we also see now with the younger generation. So there are the people 40, 50 who are still working. They don't have time. If they have a high earning jobs, they normally work from 6 o'clock in the morning to 10 a.m. in the evening, and the banks are open, let's say 9 to 5. So when are they banking? They are banking on Saturdays and Sundays, or at 2 a.m. in the morning. And for example, the journey I showed, when I received from my advisor at 3:30 in the afternoon the proposal, I have the ability to look at it at 9 p.m. in the evening, and then can still answer him. So this whole thing helps also to bridge this timing gap between when do the clients bank and what are the opening hours of a bank. But there, as said, there are not too many. There are some pioneers in the market who did quite a lot during the whole COVID situation, which was like a catalyst for these digitalization topics. But I would say over the next 2 to 3 years, there will be a lot of traction in this area. And those who are not doing this, they might be then not the favors of the clients.
Okay, thanks, René, for the answer. Then there was another question which came in. I mean, that goes to you, Mark, from Third Eyes Analytics. I mean, how can financial institutions benefit from your solution?
I mean, in various ways. I mean, on the one hand side, we significantly reduce the time for a really holistic investment proposal. So normally, if we compare it with a financial plan, it takes ages to have that one done. We can compress it within a client meeting. That's one thing. The second thing, which is super interesting, if you use solutions which I've shown at the beginning, for example, for existing clients or prospects, because we are able to model wealth development realistically on a quarter-by-quarter basis, we can directly calculate customer lifetime value. And we can also show the customer lifetime value pre and post optimization. And suddenly you're no longer talking about investing cash as a result of negative interest rates, which has an effect of 75 basis points. But if you increase your equity quota by 10 or 20%, you have in the long term such a higher growth, which has a tremendous impact on customer lifetime value. So you start looking at things completely differently. So you can quantify customer lifetime value, you can improve it. If you can convince the client to invest, and this is obviously where we help as well, because we show also the negative scenarios and how it improves. And last but not least, using it for prospects is super interesting to early segment prospects as well.
Okay. Then I can see there are further questions coming in. I mean, I put this to the round. I mean, the question was, I mean, do we still think, I mean, there will be bank branches in the future? I mean, in terms of when this digitization moves along as outlined here. Who wants to go for that question?
Yeah, so maybe my view is in retail, definitely, because there you need this, because people, they want to withdraw money, they want to talk to an advisor. But for example, in the village where I live, there's also a retail bank. Now, if I go in there, there's an ATM, there's a machine where I can get my account statements, and there's a big TV hanging where I can press a button and then I get connected to an advisor via a video call, and then I can talk to this person, or there's a small room where I can make an appointment and then there is a physical person attending. But this is something which is in line with the needs nowadays. If we look at for private banks, or they still have their, let's say, flagship locations where they are meeting the clients, and we see this in the large cities, for example, in Switzerland, in Geneva and Zurich. There will always be the headquarters or the large branches of the established brands, and I think this also belongs a little bit to the user experience, to the feeling what I would like to have. But I think the whole hybrid or the remote or self-service part is an extension of what we saw in the past, and this gives just another option to the clients that they can choose what is the right fit at the right time for them. So it's more a convenience topic.
Okay, thanks. Then the next question is, what are hurdles when implementing chat projects in digital advice? I mean, Nello, you have done a couple of chat projects already. I mean, what's your opinion?
Thanks, Roberto. One challenge, it's not the only one, but one challenge is definitely that you cannot cover everything with the chat. You should focus on what the chat will cover. So and also ensure that if the chat is not able to advise or answer, that you always, or the chat redirects to a person, to an advisor. So it's not like the end of the street or the end of the communication. It's just an additional or the start of the conversation. So these are two, I think, very important topics, and these are not the only ones, but I think focus and make sure if bot does not help, then redirect and enable the advisor. So we have a digital human conversation.
Thanks. Then there's the other question which goes in the direction of René from ClearLogics. I mean, the question is which digital topics, trend topics you have implemented in banks in the last 12 months? I mean, what are like concrete examples?
Yeah, so I think the most obvious ones was everything which is related to remote interaction, because the banks were not, out of the blue, they were not able to meet the clients anymore. So the whole digital onboarding topic was something which was where we saw high demand. But on the other hand, what also Mark mentioned, everyone is talking about sustainability and ESG, and how can you do this, for example, to reduce paper? We did a project in the UK with a bank or a wealth manager who saved roughly £1 million per year on paper and paper-related efforts by just switching some things from paper-based to digital. And one example, which I think is a typical thing, is the corporate actions. So when there's a split, when there's a rights, when there are mergers, normally if I have my portfolio with my 50 or 100 stocks and I'm a private bank having 5, 10, 20,000 clients, you can imagine what this means. If there's a stock split in the Tesla share, I can say at least out of my 20,000 clients, maybe 5,000 have this Tesla share in the portfolio. This means for me as a bank, I have to make a paper letter or 5,000 paper letters where I said, there's a stock split in Tesla. Do you want to participate or do you want to sell your shares? Then I make option A, option B. Then someone has to put all the things in an envelope, send them out, and then the advisor needs to call the client if they are not signing option A or B, putting it in an envelope, going to the post office, put it there, because there's often a due date where the advisor needs to know how he should act. And this, if you have at least 1 or 2 or 3 of these events, you have easily 10,000 of letters, of paper letters. And we saw from studies that such a letter in Switzerland is approximately 4 to 5 Swiss francs to do so. So you have easily hundred thousands of Swiss francs you can save per year, and on the other hand, you can save tons of paper by just using, for example, such a channel which I show, where you digitize this letter, you put it in a central CMS location, and then all the clients having this stock in their portfolio get notified. They can open the document. The only thing here is that there's then a feedback loop. I can take option A or option B, and then once I made my choice, it's automatically sent back to the bank and the advisor can act. So no follow-ups, no paper, and this is the most common use case, which is best for digitizing things and being environmentally friendly, where a bank can really say, yeah, we did 2 flies with 1 slap.
Okay, excellent. So I can see there are no more additional questions. So thanks a lot. So, I mean, I would like to express my thanks to all of you speakers, as well to our partners, Crealogics and Third Eyes Analysts. It was a pleasure to have you here and to work together with you guys. So thanks really for your contribution. For me, I do have like 3 main key takeaways. I think number 1 is, I mean, when fintech really focus on their core competences and work together, I mean, something new can be created. This is well, I mean, Nello tried to explain this. I mean, this is as well what we try to do with our fintech partners. So we bring them together, with our clients, and try really to develop something new, like you have seen. The second takeaway for me is really, I mean, it goes into the existing IT infrastructure. I mean, you have to bridge it from an existing world legacy system into a new world, and for this you need really a flexible and modular platform in order to integrate third-party tools, like in this case with Third Eyes Analytics or with others. And I mean, René, you have shown this. I mean, with the Crealogics platform, I think you are really able to play in that field. And number 3 is climate change. I mean, Mark, I mean, that is a big topic that's really becoming more and more relevant for investors. I mean, you have seen or shown how this works together with the asset allocation. I mean, that was really impressive. I mean, I think not many players in the world have such tools in place. So I think that's for me the third takeaway. So thanks a lot. I mean, if you're interested, I mean, for the participants or listeners, I mean, if you're interested in exploring these topics further or work with Crealogics, with Third Eyes Analytics, or with Capco Andrion on specific cases, I mean, then reach out to us. We are happy to work with you and create or work with you on workshops. So that brings me to the end. So thanks again for participating in this webinar, and then I wish you all a fantastic and great evening. Thanks.
Thank you for having us.
Thank you.
Bye.